We begin tonight with Fonterra. The dairy giant today announced the first annual loss in its 17-year history. That's a more than usually significant profit result in the life of this country. Fonterra is New Zealand's largest company. And while its net loss of $196 million included a big payment to Danone and a write-down on its being mate investment in China, the company hastened to state and then repeated a simple message: it can and must and will do better. The language was willfully reassuring. Interim CEO Miles Hurrell says Fonterra has a major review in the works to address its financial performance. But analysts are concerned that it's developed a bit of a pattern of over-promising and under-delivering. Lots of coverage on Fonterra tonight. We begin with Annika Smith and this report.
So the headline number is good, but where we haven't performed is in our earnings and forecasting. It's certainly not where we wished to end up.
The chair of the country's biggest company, John Monaghan, delivering the bad news. The first loss in the dairy giant's history, and one that was bigger than they predicted. Fonterra's interim chief executive, Miles Hurrell, admits they were caught by surprise.
Our forecasts were too optimistic. Also, the commodity prices, which is the input costs for our business, were stronger in the second half than we had assumed. We have a clear plan around how we're going to lift our performance, and this involves us doing things differently.
ASB's senior rural economist Nathan Penny says a worrying trend is emerging. He says the loss is grabbing headlines, but there's a worrying pattern of underperformance.
The sort of pattern of Fonterra starting the year and issuing its sort of forecast for the year for its profit or its earnings, and generally over the last few years they haven't hit those targets, and that is a worrying trend as well.
Mr Penny says at least the milk price is still strong, meaning that Fonterra's thousands of farmer shareholders won't be hit too hard. But he says that's not enough to make the company a success.
Some of the key challenges for Fonterra is getting that balance between paying its farmers well for their milk, but also being able to add value to that milk in the form of consumer-based products.
The chair of Fonterra Shareholders Association, Duncan Cool, says the result is extremely disappointing, but not unexpected.
As farmer shareholders, we deal with ups and downs on a daily basis, so nothing new in this. Frustration that as farmers we have control over many levers in our own business, but we don't have full control over other levers.
And he's confident Fonterra can turn things around.
I think the first thing that Fonterra board and management need to do is, in terms of believing, is deliver results. So I guess that's the call out from us, is that get some runs on the board and let's start building some confidence back again.
Fonterra's chair John Monaghan says the company is putting plans in place to avoid being too optimistic about its forecasting in the future.
It really goes back to what's been said before. On the one hand, it's taking the full stock of the business. It's really getting our basics right, going back to basics, and improving our forecasting. And that's about looking at all of the assumptions that we have, understanding the upsides and downsides, and making sure we're taking a full and balanced approach and investing accordingly.
The company says despite its troubled being mate venture, its business in China, its largest market, is doing very well, with 11% of all dairy consumed in the country coming from Fonterra, an appetite that the dairy giant hopes will continue to grow. Mo te hōtaka o te ahiahi nei, ko Annika Smith aho.